Okay, we just heard from Engineer Olowokere, and our topic again is floating Naira and new economic policies, the new hope for Nigeria's non-oil exports. So we now go to the second person to speak with us today, Wilson Erumebor, who has been robustly introduced as well. I just put in a little word that his career journey began in 2008, where he served as a research analyst and student associate at Value Frontier Limited, an economic research and consulting firm. So I bring you in. You have the floor
now. Yes, thank you so much for having me. I hope you can hear me. It's a pleasure for me to be here. I was here last year, and I should say that a lot of things have changed, particularly from the CBN side, because I think we hammered on a lot of the ills that we had in the system over the last decade or so. But now I think there are a couple of changes, perhaps from the policy side, the CBN side, but still, if you look at the structure of exports, not so much has changed. And I should say also a thank you to Dr. Olowokere for that insightful presentation. I think that was, had lots of useful information and provided a very interesting perspective. For me, I'm not as optimistic as he was as far as exports is concerned in Nigeria, and in particular non-oil exports. Not because I do not like Nigeria, but perhaps because I think we haven't really started the work yet. We just made a move which I feel should have been done, many years ago by removing the peg on the exchange rate, because, like we've argued previously, I mean, this encouraged lots of arbitration. People were taking advantage of those, the gap between the two rates, and of course all the other rates that we have. But I think, yes, this is something good that we've started on a good note. But the real work, I must say, in my view, has not begun. And when you look at the numbers that the main speaker showed, you would realize that yes, there's been growth in exports. There's been growth in exports in general, especially when you compare with the last quarter of the year. But then when you drill down, right, you would see that even with the growth, non-oil exports still account for 10% of total exports in Nigeria, as far as as of the first quarter of the year. And this is typically the share that we've had. If you do an average over the last 4, 5, 6 quarters, in fact, you would see that it's almost the same, right? Because if we focus a lot more on just non-oil exports, yes, you would see that growth, but we should be comparing that growth with how oil is performing. And I think it's also important to point that even now, oil is not really doing well as far as, our output are concerned, issues with theft and all of that. So when oil is still not doing well and non-oil exports is still accounting for just 10% of total export, I think we have a long way to go. And when you drill further down, you look at agriculture, like he mentioned, you would see that agriculture accounted for just 4.3% of total exports, in the quarter. 4.3% is, I mean, I don't know how else to say it, other than to say that that's ridiculously low. And when you even drill further to manufacturing, the data from NBS still showed that, manufacturing export was valued at 131 billion naira. And in terms of total export, it's just 2%, right? 2% of what Nigeria exported in the quarter goes to manufacturing, is manufacturing goods. I mean, that in itself tells you that, in my view, we haven't really started the work. Yes, it's the first quarter. The reforms were made, in the second quarter. But then I still think we have a long way to go as far as these shares are concerned. And if you also go further to even look at the kind of manufactured goods that we export, and I think this is where I would, anchor my main point on. You would see that, our top five, one of the first one there is on wrought aluminum alloys, 22.6 billion naira. And when you look at, maybe I should go to the next, vessels and floating structures as quoted by the NBS. The next is cathodes and sections of cathodes. The other is oil cake and, solid residues and co. And when you look at all of these, you would see that by measure of product complexity index, how sophisticated are these products? What does it take to produce these products? You would see that they rank extremely low on the PCI index. In fact, for the first one, which is the aluminum, you would see that it's 3,609, on the PCI index. That means what we should be looking at, how complex, what is the sophistication of these products, that we export as manufactured goods. So on the one hand, 2% of total exports as manufactured goods is really low. On the other hand, we're looking at the fact that the kind of goods that we even manufacture is also extremely low. So I think these are, and so as much as we celebrate all of the positives that come with a flexible, a managed floating exchange rate, which again, by the way, still deserves or demands a lot of clarity as to what role the CBN will play going forward. Just recently, I spoke at the Chatham House event, in London, and in that event, we had all of the big fund managers from Goldman Sachs, and all the likes. They were seated in the hall. And one of the key concerns they had was, yes, we've made progress with reforms like this, but what is the next step? Who knows what's the blueprint? Who knows what the next step, what the CBN will do next? Can we still, have we moved to the point where there's confidence on the economy and we can bring in say $1 billion, $2 billion, worth of investment into Nigeria? So those are the questions that these investors, fund managers are asking. And as far as I'm concerned, the answers are still not yet known. Perhaps maybe some more clarity will come as we proceed along. But I think, there's still that clarity that needs to be had, as far as foreign exchange reforms are concerned. And the other thing, maybe I should wrap up with this, is how ready are our businesses to take advantage of the opportunities that a devalued or weakened exchange rate presents? I think that's one key area, that I think we should, focus more on, because, surveys show, if you read one of the reports by Fate Foundation, 64% of small business owners in the manufacturing sector, they said they were aware of at least one business that shut down, in the last 1 year. So some of our businesses are struggling to cope with, the business environment. Even awareness on AFCFTA, for instance, a survey that was done some years back or a few years back, showed that, about 75% of businesses that were interviewed did not even know what the AFCFTA was. If you go to the manufacturing sector, that share is even way, way, way lower. And many of our informal traders do not really, understand these trade deals. So we're saying, how export ready are Nigerian businesses to take advantage of this devalued or weakened Naira? So I think I would anchor my points there. And maybe I should just conclude by saying that, one thing with Nigeria is anytime we have a problem, I think we always seek the easy way out, of that problem. So for instance, we had issues with oil revenues. We couldn't do, oil was being stolen. We couldn't raise more revenues. What did we do? We ran to the CBN, tried to raise, borrowed 22 plus trillion naira within a short period of time from the CBN. Now, in fact, there's an act in a bill in the National Assembly. They're trying to raise how much the federal government can borrow from the CBN from 5% of its previous year's revenue to 15%, right? So I think we need to start talking about that reflection point. At what point do we have to do things have to get too bad for us to realize that non-oil export is the way to go for Nigeria? So I still feel like this exchange rate thing, as much as it comes with opportunities, if the inflows do not come in, the government will, by next year, I'm very sure, they will go to the Eurobond market and borrow money in dollars to get inflows. So I've not yet seen that much commitment for the government to see that, look, non-oil export is what has led many countries, particularly the East Asian countries, to where they are today from where they were, 30, 40 years ago. And that is where we need to start moving towards. So all of those industrial related reforms, trade policy, Nigeria's trade policy has been under review for over a decade. We don't know where it is. No industrial policy as we speak. So many things that I feel would impact the hardcore businesses, the guys that run businesses. We're not talking yet about those reforms. And I think those are the critical reforms, our ports, standards. The presenter mentioned oranges. What is the level of standards that, that go into producing those products? So I don't think having a devalued currency alone means we're in El Dorado, or we will get to El Dorado. I think all of those critical works that we need to do, we should start them now. So I think I should stop here. Thank you.